Welcome to Furniture Industry News for Friday, August 9th, 2024. Let's dive into the latest insights and updates in the furniture industry. We've got a lot to cover, from housing affordability and its impact on furniture sales, to the latest survey highlighting the role of financing in driving revenue. We'll also discuss trends in mattress shipments, key takeaways from the Las Vegas market, and updates on how the recent stock market performance is affecting our industry. So sit back and enjoy as we unpack these important topics. Housing affordability continues to be a critical issue affecting furniture sales today. As the cost of owning a home rises, potential buyers find their budgets increasingly stretched. If purchasing or maintaining a house absorbs most of their financial resources, they have less to spend on furnishing and decorating their new spaces. This is especially true for young buyers and first-time homeowners, who often find themselves priced out of the market. Recent data highlights drastic differences in housing affordability across the United States. For instance, states like New York, Massachusetts, California, Hawaii, and New Jersey top the list for high home prices and associated costs. In New York, residents need an annual income of around $195,563 to afford a home with a median price of $541,700. In contrast, states like Mississippi and Louisiana offer far more affordable options, with annual income requirements around $39,880 and $47,061, respectively. These regional disparities affect where people can afford to live and, consequently, how they spend on furniture. In the South and Midwest, where housing is more affordable, consumers might have more disposable income to invest in furniture. However, in the more expensive states, high taxes, maintenance costs, and additional items like home insurance absorb potential furniture budgets. The rising costs of existing homes, often sought after by young families, make the situation even more challenging. The National Association of Realtors reports that the median existing single-family home price reached $424,500 in May, a 5.78% increase from the previous year. These increased home costs, along with other expenses like renovations and essential appliances, leave little room for discretionary purchases, including furniture. The cycle of high housing costs may also discourage new constructions aimed at younger buyers who would otherwise contribute significantly to furniture sales. Interestingly, 70% of furniture purchases are made by millennials, but many find themselves unable to afford their dream homes and, consequently, the furniture they desire. In summary, to navigate these challenges, the furniture industry might need to focus on offering more affordable options and flexible financing solutions, making it easier for first-time homeowners to furnish their new spaces despite high housing costs. A recent survey by Charge After reveals that financing is crucial to driving furniture sales. According to their 2024 point-of-sale financing report, many retailers are struggling with approval rates. More than 50% of merchants reported approval rates below 60%, a steep decline from the previous year. Only 2% of merchants achieve rates above 80%, down from 12%. The report highlights that many retailers aren't meeting the needs of customers across the credit spectrum, significantly impacting sales. To counteract this, 78% of merchants identify point-of-sale financing as a strategic priority for the next 12 months. Their top priorities include improving in-store capabilities, enhancing the customer journey, optimizing finance data, and expanding lender portfolios. However, retailers face significant challenges. Compliance concerns, lack of IT resources, and security issues top the list. Despite these obstacles, focusing on financing could be a game changer for furniture retailers looking to boost revenue in the coming year. The first quarter of 2024 has been tough for the bedding business, with a notable decline in both mattress shipments and their wholesale dollar value. According to the International Sleep Products Association, mattress and stationary foundation shipments dropped by 3.6% compared to the same period last year, decreasing to 9.3 million units from 9.6 million. The dollar value also saw a slide, down 3.4% to $2.36 billion. Imported mattress units faced an even steeper drop of 10.6%, likely due to recent anti-dumping petitions against countries like Mexico and Italy. While the average unit price for mattresses did rise by 7.6%, the overall market faces challenges from economic conditions and shifting consumer behaviors. The recently concluded Las Vegas market saw mixed responses regarding its success, with perceptions varying depending on who you ask. Diving into specifics, the bedding vendors were notably busy, reinforcing that this market remains their primary event twice a year. For these vendors, the event's effort and investment were worthwhile. On the other hand, design vendors also displayed impressive traction, potentially due to the increasing influence of designers who adapt to ever-changing client needs. Always on the lookout for unique and appealing products, whether new or not. Traditional furniture vendors, especially those targeting the top 100 retailers, found the Las Vegas market useful to secure placements on retailers' shelves, especially those that had their items on a maybe list from the High Point market earlier this year. They valued the opportunity to showcase their goods again, which may make a difference in securing retailer orders. In essence, while the market's overall success might be up for debate, individual vendor experiences illustrated the market's varied impact across different categories, with strong showings from bedding and design sectors contributing to a complex and multifaceted event outcome. A recent downturn in the stock market, fueled by concerns over a potential U.S. recession sparked by a poor July jobs report, has rippled through the furniture industry. Several leading furniture companies like Flexsteel, MillerKnoll, Culp Incorporated, and La-Z-Boy initially saw sharp drops in their stock values. However, they rebounded quickly, hinting at market resilience. Industry experts, such as Jerry Epperson, suggest this downturn may be a temporary overreaction tied to worries about unemployment, financial issues in Japan, and geopolitical tensions. Looking ahead, the hope is that as interest rates drop and new home construction picks up, the furniture market will see a recovery. Investors are advised to stay patient as the long-term outlook suggests a positive upturn starting potentially in 2025. Hurricane Debby recently made landfall as a Category 1 storm, bringing heavy rains and flooding through the southeast. Fortunately, the impact on furniture retailers was minimal. Several stores, including 1915 South, City Furniture, Clive Daniel Home, and others, reported limited disruption. Most experienced only brief closures and some flash flooding, but their teams are safe and operations are returning to normal. Despite the storm's severity, the furniture retailers demonstrated resilience and quick recovery efforts, ensuring minimal long-term impact on their businesses. Our house experienced a minor dip in Q2 net revenue, closing at $309.8 million compared to $312.9 million in the same period last year. The decrease was attributed to the lack of prior year backlog deliveries and the implementation of a new warehouse management system. Despite this, our house has stayed focused on growth, opening 8 new showrooms this year and celebrating the milestone of their 100th showroom. CEO John Reed remains optimistic, emphasizing their strategic aim to expand to 165 traditional showrooms and up to 100 design studios, showcasing the company's dedication to long-term growth and brand awareness. After an impressive 157 years in the furniture retail business, Bergdorf Interiors in Louisville is closing its doors. This landmark retailer has been a staple in the community since 1867. The decision to close came after a challenging few years, especially following the loss of its owner, Alan Morris, in 2020. Bergdorf has seen numerous locations throughout Louisville, with the current one in Middletown for the past decade. As they prepare to close, the company is liquidating their inventory, marking the end of a historic era in Louisville's furniture scene. Thanks for tuning in to Furniture Industry News. If you enjoyed today's episode, be sure to subscribe to our podcast for all the latest updates and insights in the furniture industry. Stay informed, stay ahead.